Welcome and good morning. Today is our third and last digital crop tour webinar, and I'm Kathy Walker, Main Street Data's CTO. Thanks for joining us today, and let me start by giving you an update on what we'll cover today. For those of you who are back for your second or third visit, you're familiar with the fact that we'll cover the national yield. And the number is holding pretty steady, but slightly up from the 182.4 that we showed you and shared with you on July 13th. Customers of Main Street Data are aware that we've been over 180 bushels per acre since the 8th of June, and we're happy to see that other forecasters are moving in the same direction and catching up with us in this last several days. We'll share with you our state perspective, and there's some records in 3 or 4 states that look like they're within reach, both for corn and for beans. We'll talk a little bit about the WASDE announcement that everybody is looking at for tomorrow, and touch on soil moisture, that key factor that people are watching for the remainder of 2020, as well as how that could potentially impact 2021. Tim Davis and Mike Feeney will spend a couple minutes talking about Markup Vision and how they're using Markup Vision in a bumper crop year to boost profitability and on both corn and beans. So with that in mind, let me turn it over to Bob McClure, our Chief Data Scientist.
So as a reminder that our progressive weather yield is a product that forecasts yield at the county level and at the state level and the national level. So basically it rolls up from the smaller regions to the bigger. It's a weather-based model. We do use NDVI to determine the merge stage. But basically our yield forecasting approach is a weather by crop stage to yield approach. So the yield forecast responds to changes in the weather forecast. And we believe this approach is superior to NDVI, especially in high yield years like this year. So, basically what's been going on over the last few days and what's coming up. So right now we're currently today, we're below average temperature, which is good. So really the high temperature part of the yield story is in good shape. We have milder than normal temperatures throughout the rest of the growing season. Precipitation is, this time of year it's hit or miss. And so yesterday, some storms came through into Iowa, but it didn't hit a lot of rain, some wind damage, and then into Illinois. So some good rain pickup. Today we're forecasting a little bit of rain in South Dakota, Nebraska, Missouri. On Wednesday, so this will be some much needed rain in the western part of Iowa, and it'll be interesting to see just how much they get. And then on Thursday, a little bit more rain. So hopefully that'll help alleviate some of the soil moisture issues they're having there right now. And this is what our current soil moisture is as of Thursday. And we talked about Woodbury County before. So Monday, Woodbury County was at 9.7% soil moisture, which is quite low. But by Thursday, with the storms that come through, it'll be 13.1%. And this view, this is a percentage view of the soil moisture, and it's good for comparing region to region, but it's not so good comparing it a region or a county to itself. And that's why we look at this normalized view. So this is the same day, but basically comparing the soil moisture to normal. And so it's not quite as a scary picture. Certainly there's some below normal areas, but it doesn't look quite as bad as using the percentiles alone. The remainder of the month, we are forecasting mostly cooler than normal, a couple of areas above, but basically cooler to normal temperatures to the end of the growing season. The bigger story is the precipitation forecast. And so, You saw some rain forecasted for this week and for the next into Thursday. And really that's, hopefully that'll do a lot to alleviate some of the soil moisture, because we are expecting the remaining part of August to be drier than normal. And in fact, Woodbury County, again, we're expecting it to be 1 2/4 or 1 2/10 inches below normal. And this is our trend yield yield gain loss. So basically, what are the changes to yield over the trend yield? And so basically, you can see if it's green, it's above average. If it's red, it's below. And you can see some issues, especially in Ohio, and obviously here in Iowa, in that part. And this is as of yesterday's weather. And if you advance it 15 days, the 25th, you can see a few more places got darker. And certainly Ohio got darker too. And there's parts of Kentucky also. This is our soil moisture. This is the 0 to 10 centimeters for August. And this is here again, this is good for measuring, comparing one region to the other, but it's not good for comparing a region to itself. And that's why we switched to the normalized view. And this is the this is the August soil moisture. And you can see it here again, much like the daily forecast, these areas are still below average. There's a sort of a drought mushrooming in this area over here, and Indiana, Ohio, Michigan. Advance it another month, it doesn't get, it stays about the same. Some of the other areas in Illinois dry out a little bit. Advance to October, and things are really starting to dry out. Then this area of the country is really drying out, and that actually continues on. And we talked about this before. Continues on to January, where we see major drying out in a large portion of the country, especially this region here. And we talked about the calendar spread we put on. So this is what we put on. It's about 4 weeks ago now, and this is yesterday's prices. So it definitely moved in our direction. Now with the winds and the uncertainty of the damage yesterday, some of this spread has actually come back a little bit. But we still expect this to be a well executed trade at the end. And as a reminder too, this is our, we take our models composed of numerous equations that duplicate the impacts of weather to crops by crop stage, and the impact of corn to the health of the plant and to grain development. And basically we take at the lowest level, we take the soil data and topography, we add in weather data by crop stage, and then we classify this into 10 bonus and penalty categories by crop stage. And you can see these here. And really, if you go back for the first webinar, Ken Kasman mentioned that sunlight, rainfall, and temperature determine crop yields on a given soil type. And that basically is the core of this model. We focused on the silking stage before in the pollination. So now as we enter into the grain fill stage, the reproductive stage, start focusing more on the precipitation, the soil moisture, and you can see it bounces around a little bit. Where we are today, we're going to lose about 1.5 bushels nationally due to drying conditions. But the temperature, as we forecasted, it's either average or below average, so that's actually going to be positive into the grain fill stage. This is something that our users of Progressive Weather Yield that they get used to looking at. And this is the 15-day flash report, yield report. And so as you can remember, our yield model is a bottoms-up model. So we're forecasting at the county level, rolling that up to the state, rolling up to the national. And that's what this is. This is a rolled up national view. And this is the yield at this point in time from yesterday's weather. And then this is the 15-day forecast, and this is the day-over-day changes in the 15-day forecast, and then a day-over-day total. And you can see over the next 2 weeks or 15 days, we're going to lose about 2 bushels of corn nationally, and a lot of that's coming at the end as the conditions start to dry out even more. This is another view in our progressive weather yield product. And so this is at the national level. So the black dotted line is the USDA forecast, and that'll update tomorrow. The gold line is a trend yield that we do. As a reminder, we do a trend yield on every county, a 25-year trend, and then roll those counties up to the national, which is a little bit different than what the USDA does. But we think it gives us a better trend overall than running a trend strictly on the national level. And you can see we start much earlier than a lot of forecasting. We start forecasting in April, and the green dots are the weather to date. The gray line is the 15-day forecast. And then this remaining dotted line of gray is we take our 6-month seasonal forecast and calculate what the yield is going to be at the end. So basically, using our 15-day forecast, it's at 182.3, and then if you run it out to the end, we're at 183.8 from a national yield standpoint. Something that we put on our chart also is the crop stages, so you really know where you are. And this is very important to our yield model. Again, it's weather by crop stage is how yields change, so we thought it was important to display the crop stages. The dotted lines are the average crop stage at that point in time. So this is average silking at 80%, average grain fill at 80%. And these two are sort of overlaid, but this is the maturity at 80%. And then it just happened that the average and the planting actually hit on exactly the same day. So those two lines are on top of each other. So this is where we are by crop stage. And you can see we're getting towards the end of the pollination stage and really to get into the beginning of the grain fill stage. Something we also do, we run scenarios. Now, early this season, we run out multiple scenarios, which are cool and wet, hot and dry, and really gives you the upper and lower bound of what we believe the forecast is going to be. But at this time of the season, as these bounds get a lot closer together, we just limit it to the cool and wet and hot and dry. So basically, where are we between those two? And this really gives us our yield range for the final. And our current, our 15-day forecast is at, again, it's 182.3, and we're at 183.8 for the national. And I think that's a slight decrease from what we had 2 weeks ago. So this is the same chart for soybeans. It's the 15-day is up from a couple of 2 weeks ago, but the 51.4 is exactly the same from 2 weeks ago. So really, soybeans is the story of soybeans. Is just, it's not. It doesn't look like it's going to be a record yield, but it's starting to, the range is really tightening in on what the final yield is going to be. These are the state numbers, and Kansas dropped back down from 2 weeks ago back to 142. We sort of thought that was a temporary bump. Another part of the story is Illinois went up from 201.9 to 209, so definitely improving conditions there. We're currently seeing 4 top producing states that will see record yields: Iowa, Indiana, Minnesota, and South Dakota. Yesterday, the USDA came out with a crop progress report. At the national level, there's a percentage loss in the good to excellent condition for corn and a percentage gain in excellent condition, good to excellent condition for soybeans. But one of the storylines of that crop report, if you looked at it, was that Iowa dropped from 73 to 69 good to excellent, and Ohio went from 52 to 48 from good to excellent. And that's basically due to the drying conditions. Now, yesterday, obviously, we had a thunderstorm go through, and with winds, a large part of the corn and soybean belt. So certainly, parts of Nebraska, Wisconsin, and northern Illinois, and then Iowa. So it's too early to determine what the impact of that will be. But as we gather more satellite data and able to look at that damage, we'll be able to update that in our yield forecast. Soybeans is it's pretty much the same story, steady as she goes, not much change in the yield forecast. And really, so if you kind of the main things of this harvest is that soil moisture continues to go down below normal in many areas. Just how fast is it going to dry out in the grain field stage? It's really a race to grain full maturity against the drying conditions. If the drying conditions are worse than we're currently forecasting, we think the biggest threat is to, at the state level, is to Ohio and South Dakota, but with parts of Iowa and Illinois also being hit with additional yield loss. And just as a reminder, if you want to go back and look, on June 1st, the price of corn was at $3.60, and that bump up was caused by the acres report that was less than expected. But we were already on that same date, we were forecasting a USDA yield greater, or we were forecasting a yield greater than the USDA yield, with the seasonal forecasts of already greater than 180. So really that was a great opportunity. Obviously there was the spike with the prices with acres, but there was the yields were pushing up. It really was a great opportunity to sell some grain for this season. As another reminder, this is part of a snapshot of what the product looks like. It's a bottoms up forecast, so we're forecasting Grundy County at 229, and that would be a record over their 225 that happened in 2018. But basically, as I said, it's bottoms up, so you can hover over any county and get the yield and understand what's going on region by region. The other thing we have, this is just, we provide this to our progressive yield customers, is, progressive weather yield is focused on supply, but we also have a section dedicated to demand. I think I showed this 2 weeks ago. This is the corn weekly exports, the total accumulated exports from last week, which is used to compare to the monthly WASDE projection. And you can see it's a little bit lower than what it should have been. And so right now it looks like they're a little bit high on their forecast for corn exports. We'll be interested to see what happens this week. And I think I don't show this here, but soybeans obviously had a little bit better week for exports and continues through that this week. So I think next in our webinar is Tim Davis, who is our VP of Ag Markets, and he's going to walk through some of the yield data from a product perspective.
Thanks for joining in with us. I'm going to, as I have the last 2 webinars, I'm going to talk about our Market Vision product. I'm actually going to concentrate on soybeans today because we really haven't talked much about soybeans. But for starters, I am going to compare our corn dashboard from 2 weeks ago to now and any changes that have taken place just as a quick review. So this is what our corn dashboard looked like on our Market Vision product, showing us at 51% sold. We had a profitability estimate of $30 per acre, around $17,000 worth of profit. Looking at the dashboard today, or as of yesterday, the major change has been an uptick in the forecast. So down here at the bottom, if you can see, I've compared the two. We were looking at a 103 MSD harvest benchmark. So that comes directly from the same forecasting information that Bob was just talking about, only we're forecasting at the field level. And now we're at a 105 to 106 type benchmark number over that 2-week period. A lot of this, if you remember, we had some really cool temperatures in the forecast. And so there was concern around if we'd have enough growing degree days. We're still cool, but we've warmed up into the 80s and nighttime temperatures into the 60s. And so that has moved these yields back up. So we gained about 4 or 5 bushels per field. So what that did for us is it added another around 2,200 bushels to our anticipated production as we forecast all the fields that I have listed for this 586 acres of Davis Farms. And so consequently then, that's risen or raised our profitability to almost $24,000, about a $6,500 change from 2 weeks ago. And now we're looking at about a $41 an acre profit. The other change is we made another 10% sale in corn. So the reason that I did that, I would consider this a national fair value sale. I'll talk about this when I get to soybeans, but we produce a national fair value number based on our supply forecast and demand forecast, and it's still running 18 to 20 cent gap to where the board is. And it just felt like getting another 10% of coverage to get myself to 60% sold ahead of the crop report tomorrow, ahead of what could be some more downside leading into a record corn harvest. So that sale was made based on that national fair value gap. So now we're going to talk about soybeans. So shifting gears, we spent the last 2 times talking about corn inside our Market Vision product, but you know, most guys are 50-50 planted anymore on corn and soybeans. So soybeans are just as important from a management practices and a profitability practice. And so this is what the soybean market page looks like. I'll dig into some of the details. Again, looking at this national fair value price, running about 15 cents under futures levels is where national fair value has been, much closer than corn. And then if we start to look at where some of the sales signals have been and also talk about our delivery period. So the other thing to point out is we can choose our delivery point inside an elevator search function in the software. And so what we're doing is we're saying a 50-mile radius of the zip code of the farm that I'm demoing shows up all the different opportunities, and they're sorted in best basis order. Now you may have trucking differences between delivery points, you will, other things to consider. But what this allows you to do is, in this case, I've picked a river market in Beardstown, which is our closest river outlet, as my basis that I want to use in Market Vision for my future sales and to value the unsold portion of my grain. So that is always something you can change as perhaps a rail market, or in corn, an ethanol plant, or a feed yard, wherever your most advantageous market is. You want to keep that up to date because you want the best value possible for the grain that you're going to continue to sell and value. So then the other piece of Market Vision on the market page is the sell signals. So basically we take the supply forecast and the demand forecast that Bob just walked you through, plus world supply and demand information. Some seasonalities are also tied into this algorithm, and we use some technical analysis on top of the algorithm to create these sell and hold windows. And so we went over these in detail in corn in the past, and this is the first time we've looked at how Market Vision would perform for soybeans. And so this is our time back here, and so I went all the way back to the October 19 harvest time period, and that is when Market Vision, which is a data-based algorithm, it's going to provide the information regardless of how busy you are or what else is going on in the marketplace. It's going to give the sell signals when the system says to produce them. And we had 2 sell signals very early, one happening in October of 19, and then another one happening right around Christmas in the first part of January. And some very nice sales were made there at 950 and 956. I was selling in 10% increments at this time period. Actually, I sold in 10% increments across these sell signals. And then moving forward in time, we had a sell signal right around in April time period of 876, had another sell signal around June 1st at 855, and this most recently here at the end of July, we had a sell signal of 893. You add all that up, and I'm 50% sold at a 906 price, just simply following those sell signals that we've had between October of 19 until now. And so the other thing to point out here too on this page is the basis information. So I pointed this out in the corn, and I'll point it out again in soybeans. What we're doing here is whatever delivery point you have chosen, we are giving you the 3-year average basis level right here in this maroon line. And then if it's green shaded up on top, that means the current basis is better than the 3-year average. If it was lower, it'd be shaded in light red down here to the bottom. And so this just helps you understand if you're selling futures, making basis contracts, doing things other than flat price sales. Knowing the basis is always very important because you can set futures and wait for that basis to improve if it seems like it's substantially lower than normal. Or the opposite of that can be you may want to do a basis contract if you're bullish futures prices. And so this just gives you that information as to what's going on with that local basis. And that can be real important if you're going into markets that maybe you don't go into a lot and you want to get a quick look at what is that situation. Is this basis good? Is it normal? Is it below average? So that's just a piece of information that's always there at the bottom of the screen on the market page. And so then let's look at the soybean dashboard. So here I am, I'm 50% sold as I talked about, and that is calculated because all of my bean fields here accumulating to the 444 acres, there's more bean fields down below, just couldn't fit them on the screen. They're all listed here, and right now the harvest index is generally right at 1. So it's basically whatever I estimated for these fields going into the season, that's where we're forecasting them at. And so that creates this anticipated production of 27,000 bushels. It looks at the sales that I've made and calculates a true percent sold, which I always talk about being very valuable in corn and can be valuable in soybeans as well if we're forecasting something substantially better than what was given at the beginning of the year. We are projecting a $19,000 profit on this 400 plus acres of soybeans. We've used a $500 cost per acre. That comes loaded with a number based on your zip code at a variable cost level. You need to add in your fixed costs or just put in the number that you think is best represents your gross costs. That's a user entry level there. From there, we can compute our cost per bushel, or some people like to talk about this as their break even. And then here, we know where we've sold the 50%, right? And we're taking the other 50% and we're selling them at today's closing bid on that river market that I had set on the market page. And so what this is saying is if I sold the rest of my beans today, which would be highly unlikely that I would become 100% sold a month or 2 months before harvest. But if I did, my average price sold would be $8.87. That'd be the weighted average between what I've sold the beans at here and what I can sell them at today. That would create this type of revenue. And so actually we're making almost the same money in soybeans as we are corn, a little bit favoring soybeans right now at about $43 an acre profitability on soybeans. And so this updates every day, and this is what I get excited about for Market Vision, is it does a really nice job of taking all the variables that are happening on the revenue side of your business and bringing them to you in a nice picture here of what's happening. So things change, right? My yields go up and down. My futures prices are moving. The basis levels are changing. My best delivery point is changing. Perhaps my cost of acre changes. If that changes, I have to manually go in there and make that change. But in corn, if I decide to put on more fungicide or spoon feed nitrogen, or maybe in soybeans, I plan something, I want to reduce my cost, you can always go in there and adjust those. But all of that is happening every day, and this projected profit is giving you a trend. Is my soybean acres on Davis Farms trending up, trending down? How can I take advantage of this information coupled with the market signals and then added in the national fair value numbers to try and make more informed grain marketing decisions? I believe without a shadow of a doubt, this information makes you more informed, and that will lead to better marketing decisions because of it. This is where the harvest price and the harvest basis comes from when we're trying to value this 887. I was just giving you a screen to show you where that information is. I previously talked about it. So that's the value where the other 50% is being hypothetically sold at.
The topics that Tim covered, Tim mentioned really well our mark-to-market functionality, taking that crop, seeing where your sales and production are at, and then taking that against the best available market. So what I have here is just a quick show of the different types of contracts which we are handling within our system. So as you can see here, not only do we have flat price, but also handle now basis, HTA, and delayed price contracts. So if you look over here on the right in this box, you can see with any amount of complicated variable price contracts, we're still able to produce a % sold, as well as tell you where all of your different risk categories are falling. Your percentage of flat price, your percentage of basis, HTA, and so on. And then at the end of the day, are actually taking this against the best available local prices to value what you don't have sold and what you don't have priced. So taking a look at that example on a super local level, I have here the farmhouse that I actually grew up in. And went through this as an example with my dad starting way back at the beginning of the year in January. So my dad is a pretty traditional marketer. He likes to know what he has before he takes it to market. So at the very beginning of the year, this was our walkthrough. We looked at the 3-year average for this field, which at the time was 250 bushels to the acre. So then I just simply asked, hey, what's the worst case scenario here? And very conservatively, we came up with about 150 bushels per acre. What I took that into is 150 bushels the acre. That's about 10,000 bushels on 67 acres here, which is the size of that plot. With the strategy of never getting us oversold, I took that as a marketable quantity, and then starting Jan 1, began pricing that as a basis contract, which I'll show you here. So here's the basis contract I made at 30 under. I used those marketing signals that Tim mentioned earlier on the basis. Notice that we were slightly above average basis at the location, locked in a 30 versus an average of I think 33 at the time, and then got to work pricing the contract out based on the hold sell window, or sorry, the hold sell function in Market Vision's market page. So I made 3 pricings throughout the course of the year, starting very early on just to establish a range here on January 6th, which ended up being my best pricing of the year at 401. Then again, there was an opportunity, a good window, not until May, so it took a little while, but in May, I priced another 2,500 bushels at about 334. And then the next window was actually that USDA report where we reduced acreage, saw a nice opportunity to price some bushels, and got off a pricing at 352 there. So taking that to the end results, which is where things get really interesting, comparing this, I'll call it the MSD approach with a wait and see traditional approach that's used on farm, the differences are pretty substantial. So remember, this is just a single field example. We're talking about 67 acres. And in actuality, that's about, that's about 10% of the total production of corn on the farm. So if you're looking at an estimate of profitability here, taking our sales and then what we have left to price for the farm of positive versus a negative outcome in just waiting until mid-August to get the size of your crop, feel comfortable in what you're marketing, it turns out to be not only calculable but incredibly impactful. So below here, I just have a few of the basic bullet points, which is, you'll notice there's a 14 bushel to the acre difference between that 250 that we had put in for an average, which is still standing today for the best guess on that field as per the farmer, and a 264, which is what Main Street Data has based on that initial estimate of 250. I actually had to come in and put in a number yield, expected yield below the market to even get us to the scenario where we could check on that. So if you've got another talking point, it's definitely 49 cents per bushel. And that's what my priced tonnage, or sorry, my priced bushels were versus his market price on those same bushels. And 49 cents actually averaged out over the total expected production is about a 17 cent bump on total bushels just in pricing those 10,000 at the beginning. So overall, the difference, and this isn't one that we're going to take full credit for, but the overall projected difference comes out to about $85 an acre. And how we see farmers and producers really using that is, you know, you'll hear often, you never go broke locking in a margin. Well, if you're going to be trying to lock in a margin, I would much rather be locking in above break even and looking at it at a full profitability spectrum that's live with current market prices. So with that, I will pass it back to Kathy to conclude, and thank you for your time.
Recap what you're thinking tomorrow's WASDE report is going to show as far as yield and acres and across the board. What's your best prognostication?
Yeah, so based on our yield forecast and based on historically the timing of when the USDA or WASDE makes yield adjustments, we're expecting WASDE to go up to a yield of at least 180 plus. On the acres, we are expecting an adjustment upward for corn, and for let's see, in soybeans, we're expecting a slight increase in their forecast for soybeans too.
Okay. Another question. Tell me about your confidence in the forecast that you guys shared today, the number that you shared, and what's your track record been?
So last year, in August, we were within 1/10 of a bushel for corn and 4/10 of a bushel for soybeans. We have back tests that show that at this time point, we're within 2% on corn and even less than that on soybeans. And so basically, we're highly confident that we're correct. In fact, others have raised their forecast to more closely match ours in the last couple of weeks. So we think the market message is consistent around yield. I mean, obviously the storms that just went through might change some of the harvested acres and some of the yield results, but we'll address that over the next week. But the other thing too is unlike other people who forecast at the national level, if we change our national forecast, we give the cause for the change at the county level. So as a reminder, we roll it up, everything from the county level. And so you can understand exactly where the yield gain or loss is coming from.
Great. Tim, so Bob mentioned how early we start forecasting. Can you share what customers are doing with that early forecast?
Well, as I said earlier, having more information, being more confident in what's happening with your farming operation is crucial to better grain marketing. And so, I think around June 1, we felt very comfortable that this crop was going to be large. That's when you saw the gap start to happen between our national fair value price and where the Board of Trade was trading at. And so using that confidence in your own crop forecast, seeing the gap in the national fair value, and then utilizing our sell signals, all of that should have put a person in a more confident position to sell grain earlier. And we've been in a downtrending market with the exception of the bump we got for the USDA report that has now been pretty much erased. We've been in a downtrending market all summer. So any sale you made a month ago, 6 weeks ago, 3 months ago is a better sale than what you can make now. And that's really what we're trying to do with our forecast. Now, the opposite could be true if we were forecasting a smaller crop, but that's not the case this year. So the value in making early grain sales is going to show itself in a large way. And the value of market vision and the confidence in your crop size and utilizing the data points that we give you is paramount to making better decisions.
Thank you. Bob, a weather question. Could you talk a little bit more about the weather that goes into the forecasting that you do? And how would, for example, the collapse of the ice shelf in Canada, how will that affect forecasts going forward? How does something like that appear? And what might that look like?
Yeah, so we rely on IBM's weather data, the Weather Channel. So IBM provides us with a 15-day forecast and with a seasonal forecast, and we take those both into account. So from a weather impact of the ice shelf, that will be reflected in the, if it is at all, that'll be reflected in the IBM forecast. But right now, we're not seeing any significant impact at this point.
Okay. And a final question here. Could you walk through the year? I mean, we have this record year. Could you talk about what are the factors that produce this record year, both in some states for beans and in other states for corn?
So basically, the planting pace was on average, unlike last year that was really late. We had optimal soil moisture for the first half of the growing season, and only a slight yield loss due to high temperatures during silking and pollination. The pace of the crop development, so it's been very good. And most of the Corn Belt still has adequate water supply for a high yielding crop. Although there are some areas that are concerned, but for the most part, a lot of areas are going to have, a lot of counties are going to have